Well, it's that time of the year where you got a lot of people talking about a Santa Claus rally. That rally, though, right now, hit the brakes a little bit. I think we need Rudolph to get back up there and start leading the way. We need some more speed on that rally because we are slowing down, have hit a little wall here where the S&P 500 went down 2 days in a row. We're not used to that this year. Still up about 30% over the last year. Pretty good returns for the S&P in 1 year. But again, that rally just hitting the brakes a little bit. We'll talk about that today. We've got some earnings reports to break down. Macy's, GameStop. We, of course, have CPI data coming our way, 8:30. That will be the market's big test this morning. Has inflation, in fact, picked back up? We've got Christian Fromhertz. We've got Putnam. We've got Kluis, a new guest coming on around 9 a.m. to help us talk some commodities. Excited for that. Packed show today. Let's go ahead and get the show rolling.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All righty, guys. No Dennis, no Joel this morning, but you've got AB, you've got Christian Fromhertz. Let's go ahead and bring Christian on. Christian, how are we doing this morning?
Good morning, AB. Yes, these guys got the day off today, and hey, it's nice to have audio back. The simple things. So nice to be back. We kind of had a little bit of a snafu yesterday, so thanks for your patience yesterday. And yeah, let's get to some charts and what futures are doing this morning. Let me just add this to the stage. There we go. We've got S&P futures. I'll start here this morning, and very quiet this morning ahead of the CPI data. Yeah, and that's a good point too. While I'm kind of going through some of these, I might as well talk a little bit about what we've got here in about a half an hour time. CPI data coming in. So I'm going to go over just the expected numbers with you really quick for 8:30. CPI is expected the month over month is going to be 0.3%. Again, these are just the expectations that we're going to get in a half hour. Ex food and energy about the same. So it's a little bit of a higher hurdle that the expectations are set, which I view as a good thing. And then that's basically it. We've got a couple other things like real average hourly earnings year over year. But that's the main event for today. Tomorrow, we're going to get the PPI report. So just wanted to cover that before I went over some of these moves, because I don't think really much is moving. What I'm watching here in S&P futures, we've got this little check back. So we've lost. You're going to probably hear me say this word a couple times this morning. Momentum. We've lost, the upside momentum a bit in equities the last couple days, but we're checking back to a level 6,039. If you want to use decimals, 0.75 is my support that I'm looking for there. Just looking at the Qs this morning too. The Qs not quite at support, but has also lost a little bit of that upside momentum. IWM just continues to kind of trickle lower. Could the CPI report, could that shake things up and maybe get the small caps going? Possibly. I think if we get a lower read, 0.1, 0.2, maybe we could see the small caps start to get going a bit, because they really have been absent all month so far. And the small caps do like to move on economic data. So that's really what I'm watching in this space. Just wanted to go through. We got Mondelez, not the headline I was looking for. Approves new $9 billion stock buyback. Don't hear anything yet about the possible acquisition of Hershey's. I saw a big red headline, but it's not about Hershey's. It's about a buyback plan. Crude this morning, just looking at some of these commodities, crude has really just been trading in a tight range. There is a headline about OPEC sees lower demand, I believe is what I heard the headline to be. But ultimately, we're just not seeing a big move. And it'll be interesting to speak to our guest at 9 o'clock to talk about some commodities and point of view about commodities because I really haven't done much in this space at all. This is nat gas, which is up a little bit this morning, but hasn't really done much. I'm just going to go through a couple of these because I think it'll be good to kind of look at before our guest comes on and talks about commodities. And also, I think agriculture commodities too, which that's really taken a backseat for me. So like I said, it'll be a nice refresher to hear anything about if there's something brewing in terms of besides the move in coffee, which is at new highs. But other than that, I don't see a lot going on in agriculture. Commodities. How do you like that little joke? Copper is not really moving too much. So that's just very quickly what's been going on in those commodities. I'm going to bring you back here to gold, which I do find made a nice move yesterday, and it's quietly this week, putting in a nice week and breaking a little bit above those November highs. So that's a new development there in gold. And let's see if that can be maintained. Again, you kind of have to be wary of gold and some of the commodities with the CPI data. Lastly, here's silver, which is down 0.5% this morning, and then lastly, Bitcoin, which has gotten quiet in the last few days, trading in a bit of a range there. It is still underneath that 100,000 level, but it hasn't gone too far under it and is holding its 20-day moving average. Also still inside the value area for December, which indicates it's range bound for now. AB, any thoughts on Bitcoin before we talk about earnings?
Yeah, I mean, before we get into earnings, I wanted to, I guess, just talk a little bit more about the overall market. And with that, we can talk Bitcoin because, obviously with Bitcoin touching 100,000 a few days ago, I mean, that was where a lot of the attention has been going. But I think for a lot of people, like for people that have been in Bitcoin and crypto for a while, this price action in some ways was kind of, I don't want to say predictable because it's never really that predictable when it comes to Bitcoin. But just the fact that like you hit 100,000, I was saying that, okay, to really be convicted on this Bitcoin rally, like if I was going to buy up here, I would want to see it get to 110 or around there to really surpass that like $100,000 level. And we haven't really. We've touched it. We've breached it. And then always there's this like kind of sell off. Like there seems to just be thick sell orders around 99,000, around 100,000 on Bitcoin. Now, talking about the overall market, I mentioned it in the intro, just that we've had this kind of stall in the rally. And it's kind of funny because like you have a couple red days in a row, and I think people start to get a little bit jittery, despite the fact that if you zoom out on the chart, we're still, within a few percentage points of those all-time highs. I mentioned over the last year, the S&P 500 is still up 30.5%, which is just an incredible move for the overall market in 1 year. And with that, I think you can expect like a little bit of profit taking toward the end of the year. And I mean, it's not something to me that's like really concerning to see a few red days here. But Christian, when to you, at what point would you become concerned about a bigger sell-off, like maybe a 10% correction in the overall market? Like if we're end up red another 2 days in a row here, today and tomorrow, then would you start getting concerned? Or like, how do you view these kind of minor pullbacks when we're still so close to all-time highs?
That's a great question. And the first thing I wanted to address, because I like your viewpoint on Bitcoin, I think that's a great thing to watch too, to see really if we could break back above 100,000. I like easy trades and easy setups. But if we break back above 100,000, then that breakout is back in play and you're above that psychological level. But until then, I think you just kind of let it do what it's doing and go sideways, because that is one area of the market that I'm watching. It's also a good gauge too of like the momentum that we've been seeing in the market, or the lack of, or the downside momentum the last couple of days regarding regarding what the overall market is doing. It's funny how that the S&P futures are kind of just quiet, right? We've had this little bit of a check back, but it's really not that big of a move. To your point about a bigger pullback, yeah, I mean, I would watch. We're not quite down. Like I tend to watch the 20-day moving average just to kind of tell me for trend purposes if we're still in a strong trend. We're still above that level. I would be bit more worried about the market if we started to break the 20-day moving average, but we're still also in a strong seasonal period. So even though December is a strong seasonal month, there are like periods within December, like many periods within December that it's a little bit weaker. So it could be that we're geared, like right now, I think that this digestion is actually a good thing, and it could set up for, that end of year Santa rally, which basically starts the last week of the year. We also have quadruple witching, but what I wanted to get to and talk about before we go into some of the earnings reports is just what's been happening under the hood. And like, you look at some of the high flyers, like an App 11. Now, of course, like this is not a big name in the indices, but I think it's very representative of what you're seeing in terms of the names that were really charging up, with unabated because they were breaking out, have now really stepped back. I mean, this is a name that's gone from 402 down to 321, and basically in 2 days. And you're seeing this in a lot of software names. We weren't on yesterday to talk about Oracle, but software has been one of the hottest areas. You could see the IGV has come in pretty decently, but again, it's just checking back to support. So to your question, I would say if things really start to kind of break their 20-day moving average, then I would be paying attention. One of the things that I'm waiting for, and again, we've got a catalyst this morning, the CPI report, which could set off some rotation depending on how the report comes out. But I would like to see some rotation into some other things. For example, take a look at the industrials. They have just been quietly going down. They're now checking. They have a deeper pullback, still above the 50-day moving average, which I view as positive, but has certainly pulled back more than the tech group has been pulling up. Also, whoops, this is tech, but I was going to bring up financials. There's been a lot of banks speaking at. There's been a Goldman Sachs conference that's been going on, and there's been pretty good. I was listening to a lot of the individual bank comments, which were pretty healthy yesterday. Nevertheless, it couldn't get the financials to get going, and that's a break of that 20-day moving average. So we'll see how that goes. I think that conference is still going on, but I think it's going to be dependent a little bit about that. Again, going to that CPI report that we're going to get in 20 minutes. Let's talk earnings. Macy's.
Let's do it. Yeah, so we had a few stocks report earnings, yesterday and today. We'll start with Macy's, which those numbers came out this morning. Macy's reported an EPS of 4 cents, which beat the 3-cent estimate. Sales came in at $4.74 billion. That beat the $4.72 billion. So a very, very slight double miss there. Macy's expects 2024 sales of 22.3 to 22.5 billion compared to prior guidance of 22.1 to 22.4. So slight upgrade on the guidance there. EPS guidance came in below expectations. They said they expect 2024 adjusted EPS of 225 to 250 compared to prior guidance of 234 to 269. The Macy's says no material impact from delivery expense related investigation. So if you guys remember a couple weeks ago, we had a headline that Macy's was essentially missing like $150 million worth of delivery expenses. I guess it was some employee that was hiding these expenses, but they did their investigation. They said no material impact. The stock is trading down. I believe this can be attributed to the lower EPS guidance. Because that was the only part of the report that was really stuck out as bad. The rest of it was like, good, I guess. It was all kind of in line, slightly higher than in line. So it was all pretty standard. And then again, you had that lower EPS guidance. So that is why the stock is down this morning about $2 or 11.5% on the old Macy's, trading right below $15.
Yeah, I don't know if I've ever heard such a thing in terms of an employee hiding hiding accounting numbers like that for a retail company, but there you have it, and they specifically mentioned it. I heard in the research that I was reading this morning. So that's a big hole, I guess, in their balance sheet. I think it was like $165 million or something like that. So yeah, accounting stuff not very good. And again, it kind of just watching Macy's go down. It just kind of goes back to what we've been talking about as some of these names have been coming out in terms of retail. You've got some winners in the group and you've got some losers. This is a loser. I would watch the pre-market lows, maybe right around $14. I would also watch. You could see this $15 level that watching as well. What else? It's a fairly quiet earnings day.
Yeah, we
What else
can
we
rip
got
through
out
a
there?
couple more earnings. We'll do let's do GameStop real quick, which we don't talk as much about GameStop on the shows. You might hear some other people talking about, but the company did report earnings. It is still a company that reports earnings. EPS came in at 4 cents. Sales came in at $860 million. That missed the $887 million estimate. The EPS beat there by a few cents. GameStop piles up more cash in Q3, even as its sales fall off, is one of the headlines I'm seeing. So the stock actually spiked on this earnings report. I guess it was not maybe as bad as some people were expecting it, because it seems like the earnings weren't great, even by GameStop's standards. So the stock actually spiked up to around $30. Now has since sold off from there down to about 27, which we closed at around 27 yesterday. So relatively flat, even after the earnings report here on GameStop. Again, nothing's really sticking out to me as like that interesting about this report. But of course, we know GameStop has the potential to trade in a crazy manner. So just because it's flat right now doesn't mean it will end the day that way.
Yeah, I mean, kind of a muted report. I mean, this stock has overall been very quiet. I was just talking about momentum names, and I want to talk about one more momentum name too that's making a big move this morning. But GameStop, like, it has moved up here, but you just really haven't seen a lot of interest in it, and that's kind of what we're seeing in terms of the earnings report too. I was listening. Sometimes I'll have Jim Cramer on in the background as I'm finishing my day. And he began to talk about how do things that we saw like a couple years ago. And he was like bashing GameStop a little bit. And I'm like, oh my God. I'm like, well, I don't even know why you would go down that road. But we'll see if it gets the support level that I would watch. I don't know. Sometimes people I think are just asking for abuse or punishment, but I wouldn't even touch it. But 26 is some support, and your resistance is 29. I really see this name in a range bound territory for a second, or for now, I should say. What I was going to talk about too was one more momentum name too, which is GEV. So this is GE Vernova. This is another name. It had some numbers out, and they announced last night. Let me see if I could just bring up the details of what they announced, because this has been another high flyer. I've owned this name throughout this year. I don't have any in my trading account, but I have it in my longer term account. And they fell as much as 5.3% after the electrical power equipment maker set out its targets at an investor event, with analysts noting that this 2025 guidance was below their high expectations. So that's the main thing. And I tweeted this out yesterday. They also announced a buyback plan and a dividend, which is all good and fine, but the guidance is a main thing. And especially when you have a high flyer like this, and you could see that it's beginning to kind of move to the downside. It is off the pre-market lows of right around 310, but I would have a hard time thinking that this name is going to continue to move higher. And it seems like it's moving at my daily chart. I would watch to see if it breaks by the end of the day 325. Notice it's also lost that 20-day moving average. So I just find it interesting in how much that we're seeing some of these, not all, but some of these momentum names begin to kind of break down, such as this one.
Yeah, and there's a few other momentum names we can talk about too, Christian, in a minute. Let's go back to earnings, though, real quick. One bright spot in earnings this morning / yesterday afternoon, Stitch Fix, which reported yesterday after the close. Smaller company, don't talk about it as much anymore, but we got to give credit where credit is due. Stitch Fix reported an EPS, a loss of 5 cents that beat the estimate of a loss of 13 cents was the estimate there. Sales came in at $318.8 million. That beat the $307 million estimate. So double beat there on EPS and revenue. And then the guidance came in well above expectations. Sees full year 2025 revenue at 1.14 billion to 1.18 billion against the 1.14. Okay, so I guess not actually well above the expectations, but above the expectations enough for the stock to be up 20% this morning. Again, this is a cheaper stock. It was, closed at around $4.60 yesterday, up about $1, which is good for 22%. Again, this is about a $500 million market cap, so not a huge company by any means. But if you're in Stitch Fix here, you're very happy with this move, up 20% before the open. You did have some analyst love coming in as well. Price target raised at UBS, at Bernstein, and Canaccord all this morning. So again, big morning for Stitch Fix, up about 22%.
Yeah, as you're giving out the numbers, I can't believe that this is a stock that's trading around $5. I mean, this was one that, going back to 2021, was trading at $96 on, again, speaking of momentum, this was one of those momentum names back in the day of 2021. I do like the for speculative trade. I do like the fact that it's been basing. It's actually been around. It's just lack of me bringing up this symbol in a long time, but it's been trading around this $5 range for a while. So maybe it can break out of this range. This is the weekly chart. Let's see what we got in terms of resistance. Next resistance would be up about 672. So again, you kind of have to like this type of business and small retail as well. But that's an interesting mover as well this morning.
Yeah, and I mean, you have this whole group of stocks that are kind of run off this, like subscription box model where you sign up for the company, you get a box every month or so. I believe that's kind of what Stitch Fix is like for clothes. Then you have Bark, which is, Bark Box. They do, something similar for pets. So if you sign up for Bark Box, you get, new toys and foods for your pets. Bark, I'm looking at that stock down a lot as well. And then there's a couple others. Rent the Runway is one that's similar, not the exact same as Stitch Fix, but it's a similar business model. That one hasn't really done well. So I don't know. I mean, I haven't really been a fan of any of these like subscription based, plays. I'm not a customer of any of these. Of course, on the food side, you have a few between like HelloFresh and some things like that. And they're interesting business models. And I know some people that are very happy customers of them. I don't know many people that are very happy investors of these companies, though, Christian. And that's what, of course, we're here to talk about. Another momentum name I did want to talk about, no earnings yet, but stock I did want to mention this morning is SMCI, which closed down over 8% yesterday, down another 5% this morning, trading now back below that $40 level. And there's not really a bunch of news on this stock this morning, Christian. I think this has just been a little bit of a sell-off after a pretty big rally, which brought us from below $20 all the way up to $50, now back below $40. So you're seeing a little bit of volatility here at SMCI.
Yeah, we talked about this one a couple days ago, and we talked about how, from purely a technical aspect, is that it basically filled the gap of when it had the accounting woes and the possibility that it was being delisted. So it's recovered that. My point the other day was it's now filled the gap, and if you were kind of had a dumpster dive on here thinking that it went down too much and we're looking for a reversion to the mean, you got it. And I think that's basically the story here. I don't, at this point, like the fact, there was a release, I think Friday after the close, saying like they've got like a stay of execution. maybe that's not the right way to describe it, but they're basically so the Nasdaq is giving them more time to kind of come out with the results. But I don't think that's necessarily, like, stocks aren't supposed to really go up just because they're staying in an index. So you got a pop on that, and the pop was short lived. And when we were talking about this, and I was talking about this with Dennis. And by the way, Joel and Dennis are out; they're just out on vacation. They will be back in a couple days, but because I see a couple people asking about them, they're just taking some time off. And there was a question about Dell, and take a look at what Dell has been doing. And again, this is symbolic of just a poor earnings report, right? There's nobody coming in here and buying the dip yet in this group, and this is what happens oftentimes. And SMCI is part of that group too. So you got the fundamentals, and if Dell had a really strong earnings report, then I would say, okay, maybe SMCI can continue with that upside move. But I think it was important to kind of ring the register. And I think when you're looking across this group now, it's also the loss of momentum. VRT is another name in this group, which has moved down. I'm going to just change gears for a minute because I wanted to talk about China for a second. I see a couple people talking about it. So there is this 2-day meeting that's going on in China about the possibility of further stimulus. They did not really announce anything groundbreaking last night. Maybe we get something else last night. We are seeing still some option positioning in China. So, for example, yesterday, one of the ETFs that tracks the Shanghai, which the Shanghai was down 20 basis points last night. The Hang Seng was also down a little bit more last night, down 0.8 of a percentage point. But the ASHR ETF saw 37,500 February 29 calls. My guess and by the way, that's $3.8 million in option premium. So my guess is somebody is still looking for more stimulus coming out of China. We'll see if we get it tonight. I was talking about, again, we had audio issues yesterday, but I was long the KWeb calls in January. I sold 2/3 of that position, and I rolled a third of that position out to what am I in here? I'm in the March calls. So March 36 calls. So I still have a position in China, but I rang the register and cashed out 2/3 of my position, which appreciated nicely. But the reason why I bring up really quickly too, we've got CPI coming out in 4 minutes. But the reason why I bring that up is what the Hang Seng did last night. You have to make sure that if that market is rallying or not rallying, sometimes you could really see a big move that's happening in the ADRs. But if that's not followed through by the move in the local markets, often you'll see what happens, which is what you saw yesterday in the KWeb ETF, which is the Chinese internet ETF, which is give back profits. So, for example, on Monday, the KWeb ETF was up 10%, but the local market was only up 2%, right? And then the following day, the Hang Seng was essentially flat, and the KWeb gave back half the gains, gave back about 5%. So it's one of those things where you want to track a little bit about what the local market is doing and not just what the ADRs are doing, because I see so much interest in like the BABA and the JD, but you need to have the local market actually support it. And if the Hang Seng isn't raging higher, you're often not going to get a prolonged move in the ADRs here in the US.
Yeah, I mean, China right now, I think it's one of those, it's like, if you're not willing to endure some, 5, 10, even 20% pullbacks here, then buying BABA, buying KWeb, it's not for, it's for the brave here is buying China, I think, because, we've seen it before where even as good as China looks for a week or two, the inevitable sell-off comes. I know that better than anyone as someone who's held BABA in my long-term portfolio over the past, couple of years. And I mean, I still like the position. I was building it, around $70, and we're up at 90 now. But to watch it go up to 100 and everything's looking great, and I'm like, finally, this is the breakout in BABA. It goes up to 120, and then boom, just straight back down to where it was. But you mentioned it, Christian. We do have the CPI coming up in a couple minutes here. I do see our man Blue Putnam just joined us backstage. So I'll give, again, the expectations for those numbers real quick. And then if Blue wants to, he can come on, as we're getting these numbers, he can come on after. Blue's the man, so he can do whatever he wants. Just let us know. I'll type to you here in this private chat here. But again, the numbers we are looking for, CPI year over year, the median forecast is 2.7%. That is actually one tick higher, 0.1% higher than we got last month of 2.6%. So that year over year is expected to tick slightly higher. Consumer price index for the month is supposed to come in at 0.3%. Again, that also is 0.1% higher than it was last month of 0.2%. Core CPI is supposed to stay pat at 0.3%. That was the same as it was in core. Year over year, expected to stay at 3.3%, which is exactly the same as we got last month. And then tomorrow morning, we do also have...
I'm going to just give the numbers really quick. It's on the screws, plus 0.3 versus 0.3. So that's right in line with expectations. I don't know how they do it, how they call it like that, but X food and energy also comes out 0.3, and nothing really changing in terms of year over year, which is plus 2.7, and the X food and energy is also in line with expectations, plus 0.3 versus 3.3 versus expectations of 3.3. So I don't know how they do it. Magicians, they get it right on the screws for all the numbers, all in line with expectations.
I mean, look, these guys are good. They might need to. I think a lot of these economists that give the projections for CPI and other economic numbers, I think they moonlight as like handicappers in Vegas. I don't know. I don't know. I know we've got a few sports gamblers in this chat, but the just how consistently, like a line will be Lakers plus 6.5, and the game ends at either the Lakers winning or losing by 6 points or 7 points. It's always right there.
Yep.
Like they're always right on the number with these, again, whether it's the economists or the handicappers in Vegas. I think I've never seen them in the same room together. That's all I'm saying is I've never seen the economists and the handicappers in Vegas together. So I don't know. I'll do some more investigating there. But let's go ahead.
Wait, I'm just gonna give you the initial reactions, and then we'll bring on Blue. VIX, of course, is down a little bit because whenever you got information out, you get a little bit of a drop in the VIX. But I do see Bitcoin moving. I see it basically a lot of things moving up, even though it's an inline number. You've got S&P futures moving a bit. We're now up about 25 basis points. The Qs are outperforming, up 0.4 percentage point, and Russell small caps are leading the way a bit, up 0.6 percentage point. The dollar's down a little bit, and muted reaction in the bonds.
All right, there you have it. There's the reaction. Let's go ahead and bring our man Blue on. Of course, Blue, former chief economist at the CME Group. We'll go ahead and give him our special intro. See what Blue makes of these numbers. All right, Mr. Putnam, it's been a few weeks since we've had you on. We're still talking about inflation. I mean, it's not dominating the headlines as much as it was a year or two ago when it was at 40-year highs and around 9-10% on the CPI, but we're still talking about it. What do you make of this number? Do you find it concerning that inflation is actually, or the CPI at least, is actually going up slightly instead of, continuing its trend of moving lower?
Oh, I don't care about 1/10 one way or the other. I mean, you thought economists were pretty good, but I tend to have a different opinion.
Okay.
That getting it within 1/10. But, what this really shows is that inflation has come down from the peak, but it's not going to go to 2%. That's the Fed's target, and it's stagnating here, a little bit below 3. The core rate of the CPI, which is above 3%, is elevated due to shelter, and that's a badly mismeasured metric. But we're in that just below 3% range, 2.7. When we get the PCE version of this at the end of the month, we'll be still in this range of 2.5 to 3. So the Fed can still ease if they want to, but they can't ease much more. So this has implications for the Fed if we're really not going to go to 2%.
Yeah, just looking at Fed fund futures, speaking of which, because the Fed's in their quiet period right now till the 18th of the month when we got the next meeting, but still anticipating and still pricing in a 25 basis point cut, 87% chance right now. So are you in the camp that we'll get maybe one and done?
I am in the one and done camp with these kind of numbers. The job market is still okay. It's slowing down from the post-pandemic surge, but unemployment anywhere hovering around 4% is very good. The inflation picture to me is a 2.5 to 3. It's not going to 2. So the Fed can certainly has room to lower rates, but not much more. When you're in the talking period, you said we're in the quiet period, so the Fed governors and the FOMC members aren't talking right now. But when they were talking, they kept the possibility of lowering rates pretty wide open. And now that we're in the quiet period, the causality reverses. Since the Fed doesn't like to surprise the market is kind of saying, well, you told us that you'd probably lower rates, so that's what we think. But the one and done is really all about not making further progress on lowering inflation. And so I think Jay Powell will be very, very cautious about future rate cuts when he does his press conference on the 18th.
Do you find it surprising, like how relaxed they are? I mean, my point of view is, just as you said, like they've made some progress with inflation, but they're not like rounding the corner in terms of like coming home, to get the job done. I mean, it's still pretty much elevated and it's stubborn, the inflation numbers. So I'm not sure why they're not more hawkish.
Well, I think part of the reason they're not more hawkish is that they have, at least internally, started to realize that interest rates aren't that powerful a tool for changing the inflation rate over time. I mean, we went from 1993 to 2019, where inflation basically hovered around 2%. Oh, a few years a little above, a little below, but I mean, that's 25 years. Now, what was going on in those 25 years? Interest rates went up. We had a tech wreck. Interest rates went down. Interest rates went up. We had a subprime crisis. Interest rates went down. Interest rates, the economy is it's interest rates insensitive. Interest rates matter, but not as much as people think, and not as much as the Fed used to think. What really happened in that 25 years is we had globalization, we had cheaper goods from China, we had a lot of things keeping inflation down that the Fed can't control. So I think the Fed is a little bit relaxed in the sense that they understand they're not masters of the universe. And what's a neutral rate for the Fed to get to? A slightly positive yield curve, so 2s below 10s, and maybe the Fed funds rate 1% or so higher than whatever the prevailing inflation rate is. And if it's 2.5 to 3, you stop around 4. So that's where they are, or close to it.
Blue, do you look at any other metrics to, gauge inflation? I mean, I know you're not a big fan of how the CPI specifically calculates shelter, which we could do a whole show on that. But, sometimes I find myself checking like the Truflation's metric, anything like that. I mean, do you have any other outside sources to gauge inflation other than the CPI?
No, I really don't look at, you can look at 20 different sources, but you're going to get the same answer. Although you did mention the CPI and shelter. If you take shelter out of the CPI, you're at 2%. If you put shelter back in, you're at 3 or 2.5 to 3. But shelter inflation may be mismeasured, as I think it is, but it's not 2 and it's not 3. It's probably closer to 4. So if you put it in correctly, you're going to be right about, 2.5% inflation. Anyway, I don't look at a lot of metrics because they're all correlated. 1 month move doesn't make much difference to me. You really got to have a trend. So I'm happy to look at the PCE core, the CPI, and just leave it at that. But you have to stay on top of all these little caveats because, people talk about them and you got to know about them.
So I mean, you mentioned that the economy, which I agree with you here, that the economy is not really as dependent or reliant on interest rate cuts or hikes, at least as much as people want to make them out to be, especially when you're talking about, 25 basis point cuts. I mean,
Yeah.
it seems to be a marginal difference. What do you do then if you're the Fed and you do see a further say slow down in the labor market? If you're saying that cutting interest rates alone doesn't help that and won't be a magic wand that fixes the economy, what do you do if you're Powell and the Fed and the labor market does continue to show, a slowdown here?
Well, I do believe that interest rates, their impact on the economy is asymmetric. And what I mean by that is when the economy is growing, even at 1.5 to 2.5% GDP, real GDP, the interest rate changes, small changes don't make much difference at all. However, if the U.S. economy were to go into a recession, say unemployment goes to 6, we're at 4.2, 4.3 now. If it goes to 6, then the interest rate cuts can make a difference because they can cushion the blow. So interest rate cuts matter when the economy's in recession. But when you're growing at a fairly steady pace and jobs are growing, 25, 50 basis points up or down isn't going to kill anything. It doesn't change an investment decision by a company because companies are looking at their confidence in the future more than, 25, 50 basis points. If that makes a difference for your investment project, you probably shouldn't do it. Consumers are stuck with high credit card interest rates who don't move that much with the Fed funds rate. And the government is going to spend money whether the interest rates are 5% or 3%. So if you go through the GDP, we're a relatively insensitive economy to interest rates. That doesn't mean interest rates don't matter, by the way. They matter big for equities. You discount anything involving money and time, you need interest rates. I'm just saying that interest rates don't matter as much as people think for the economy, but they matter huge for financial markets.
Is there Blue? Is there anything else on your radar for the month of December? I know you mentioned the PCE prices that we get at the end of the month, but anything else that you're kind of looking at in the short term, whether it be we've talked about interest rates, but the dollar or any other economic stat that we should be watching the next couple weeks?
Well, we all watch the weekly unemployment insurance claims, but I will tell you that in December and January, they're not reliable either because you get a lot of people hired for holiday sales, driving trucks, doing that, and then they get laid off in January. So that number is seasonally adjusted to death for the next 6 weeks. So as far as the Fed's concerned, there's no more important economic data coming up. Obviously, there are events going around the world that make a difference, and you certainly have to look at the political process and how the cabinet's shaping up for President-elect Trump and things like that. But the Fed's not going to make a decision on any of speculation about what the next president's going to do. They're not going to worry. They're going to wait to see what President Trump actually does. Getting one more rate cut done and then going on hold while you wait and see is probably not a bad plan.
Gotcha. Yeah, I'm a fan of that. I'm a fan of when there's less things to that we've got to worry about, in the near term. The seasonal factors. That's a great point to kind of be mindful of. Some of that information will get distorted, I guess, for the holiday sales. But I'm a fan of worrying about less things than than more things on the horizon. So I enjoy the Fed quiet period. And I think it will be interesting to see if they kind of pump the brakes on future cuts.
Yeah, it'll be very interesting to see. And that press conference is going to be absolutely fascinating on the afternoon of the 18th, because that's when we're really going to get an idea about what next year looks like. But next year, the big thing I'm watching for next year is the debt ceiling. It's not on everybody's radar, but it goes back into effect on January 1st. at whatever the level of debt is, which will be around 36 trillion. And so whoever's the new Treasury Secretary is going to have to manage that, and it'll be a crisis around July.
Oh,
And
great.
of course, the Republican Congress and Republican Senate are going to have to own that debt ceiling increase. So, basically, there won't be any tax legislation. You won't extend the 27 tax cuts. You won't cut corporate taxes. You can't do anything till you figure out that debt ceiling. So, I'm afraid the next couple of months are all going to be politics and not much economic data.
Yeah,
I can talk politics too,
we heard we heard Janet Yellen yesterday, and she basically said when they were talking about reducing the deficit, and she's like, "Ah, sorry, I wish we could have reduced it a little bit further, but okay, I'll see you guys later."
Yeah. Well, it's a very stubborn problem. If you cut taxes, you're not going to increase the economy that much. You're just going to increase equity markets, which is not a bad thing. But you're going to widen the deficit. And interest expense is the fastest growing item in the deficit right now, at $1 trillion a year. I mean, it's just amazing. So cutting the deficit is going to be hugely difficult, which means you're going to have to raise the debt ceiling. Or maybe you get rid of it altogether, but you still have to own how much debt comes out.
Right.
What about, just right now, Blue, and when we're talking about the labor market slowdown, there's been a lot made about the potential for AI to take, certain jobs and whatnot. Like, where are we actually seeing the slowdown, and when would you get more concerned about what we're seeing in the labor market could be indicative of an upcoming recession? Like if we saw X amount of people laid off from a certain type of job, is there anything that would be like a big red flag to you?
What's a red flag if it starts happening in a lot of places all at once? And that usually takes some kind of trigger. An email goes out to the entire world and we all get it that something really bad happened, like September of 2008 when Lehman went bankrupt and stuff like that, or the pandemic hits, But absent some huge trigger, as long as the sectors are kind of bouncing around, we gain some jobs in leisure and hospitality, we lose a few somewhere else, that's no big deal. I think what's really happening now is we had a pandemic, we came out of the pandemic with a job surge. That's gone away, and now we're kind of finding out where is our economic equilibrium, and that's probably headed toward 100,000 new jobs a month, an unemployment rate maybe between 4 and 4.5, which is kind of where it is. But if it ticks up to 4.5, some people will get nervous, but that's just a tenth or two, and in a GDP of around 2%, real GDP, it'll bounce higher and lower, but that's kind of a steady state until we do something different. Most economists, myself included, we're a little nervous about tariffs, but if they're bargaining chips and we're not going to get some big, huge increase, that won't make too much difference. We're worried about deportations because, immigrants do a lot of work in hospitality. They do a lot of work in food and dining. They do a lot of work in construction. We could hit the economy there, but we just got to wait and see what happens.
Yeah, I think that's the tough thing is obviously since the election and in this period of time in between the election and inauguration, I've had a lot of conversations with people about the potential economic impacts of some of these policies, but it always comes back to, well, we'll see if those end up actually happening. We don't know to the extent of what we're going to see in tariffs, what we're going to see in deportation. So I'm like, well, here's what could happen, if those do happen, which I think, again, like if you did the level to what, some of Trump's administration has talked about in terms of a 20% blanket tariff or 2 million deportations, and you did that overnight, like that's almost certain to, if not cause a major recession, at least a big economic slowdown. But we don't know if those things are actually going to happen. So I'm like, all right, well, let's wait to talk about those things until we get some more clarity there. But it'll certainly be interesting, as we get a month or two from now, once we get a little bit more color on exactly where they're headed on those specific issues.
Yeah, no, you're exactly right. And you can build as many scenarios as you want, but then when you go to put probabilities on them, you realize you don't have a clue. So it's probably not worth the time to do too much planning or scenario building while we're thinking about this. But we just have to wait and see. And it's going to be a very uncertain year. I mean, the reason I focus on the debt ceiling is I think it delays all kind of tax legislation and spending until you figure it out. But on tariffs and things, the president can do an awful lot on tariffs if he invokes national security, which he's usually willing to do. Then he has a lot of individual, presidential power to change tariffs, so you don't have to wait on Congress. But I think, President-elect Trump is very interested in tariffs as a bargaining tool, not necessarily as a blanket tool. And by the way, if you did raise tariffs to 20%, or like he's talking about China 60%, the U.S. isn't the big beneficiary. I mean, Apple makes a ton of phones in China still. They're moving production to India, but they still make more of them in China. What happens? Who wins? Samsung wins. They're in Korea. What happened last time we raised tariffs? We raised tariffs on China. They stopped buying our soybeans. Our farmers lost, and Brazilian farmers won. There's always retaliation on tariffs, and it isn't always higher tariffs on you. It can be, I'm not buying this. I'm not going to sell you this. You don't know how the retaliation works, and it's really not good. So it's better to, I tend to think of tariffs as a bargaining chip. I don't really like that as a policy, but, it's not as dangerous as just raising them blanket over everything.
All right, well, we've been on the line with our man, Blue Putnam, of course, the former chief economist over at CME Group. Blue, it's always a pleasure to catch up with you, especially on these days where we get big economic news. And again, we've got more coming tomorrow. Before I let you go, you got any big predictions about tomorrow's, jobless claims, PPI, anything there?
I'm going with in line. I think it's time to take the rest of the year off and not look for big changes in the data.
All right, there you have it. More in-line numbers tomorrow morning. You guys don't even need to tune in now. You already know what's going to happen. Who told us? So, all right, Blue, enjoy the rest of your day. We'll catch up soon. Of course, if not at some point before, then definitely next time we get CPI next month. If we don't see you, happy holidays and enjoy the new year.
Thank you. Happy holidays.
Thanks so much, Blue.
All righty, guys. We've got a few minutes left here till 9 a.m. We do have another special guest hanging out backstage, a rare 2-for-1 today. We've got Al Kluis, who's going to come on and talk some commodities here. I do see him hanging out. Al, let us know here in this chat if you want to come on a few minutes early. We'd be happy to have you. Otherwise, we can run through a few stocks.
Yeah, ticker time. Let's do some ticker time. I also just wanted to mention a couple quick things too. The quantum names. I thought that this move in Google was really interesting yesterday, where they're announcing they're coming out with this fastest chip in terms of quantum computing, and some of the reactions. But it looks like I was wondering if we were going to see some sustained strength out of Google, because there really hasn't been much going on with the stock, and until yesterday, where it had this big move breaking above previous highs. Let's see if it could hold this gap. That's what I would be interested in, because I'm not long Google. I don't, haven't done anything in a while in Google, but it's not to, if there's a new catalyst, I know that they're still caught in like the regulation firestorm. But if there's something new coming out, I think that's pretty interesting. And I'm watching some of these other small cap, speaking of quantum names, but, take a look at what this RGTI, this is a small cap name, but got some momentum to it. And then the other thing, before we do just a couple quick minutes of ticker time, not SMCI, SMCH, just watching what's been going on with the overall semis group, which has not looked great, but continuing to bend but not break down. We saw a big move down in NVIDIA yesterday. NVIDIA is now below its 50-day moving average. We've got a big earnings report coming Thursday after the close, which is Broadcom, which I continue to see some option positioning in on the long side. But it'll be interesting to see if Broadcom can get this group going. Any other names that anybody is looking at? There was one story out about the possibility of Palantir and MSTR being added to the NASDAQ 100. That caused this name to move a little bit in the after hours. I would watch the 73.25 level. That'll be something to watch. And MSTR, which is another possible add in the NASDAQ 100, isn't really moving that much on that news, but it's also not breaking down either.
Alrighty, I did get word from our next special guest, Al, that he is ready to come on. So, he's been patiently waiting in the backstage. Let's keep. I don't want to keep Al waiting, so let's go ahead and give him our second special guest intro of the day. I believe a first-time guest here on Pre-Market Prep. We're again going to be talking some commodities. Exciting conversation because we don't talk about commodities enough here on this show. So without further ado, let's go ahead and roll that intro and bring my man Al on the stream. All right, Al Kluis joining us again here from Wedbush. Al, I couldn't tell if it was Al or with a capital I, if it was AI. So how do I know you're, a real person and not AI before we get started?
In business, I'm Al. For most of my family, I'm Alan. So call me Al.
Okay, Al. So Al, I probably didn't introduce you well enough. I mentioned you're at Wedbush. You do commodities. What exactly do you do at Wedbush, and how long have you been in the commodities space?
I've been in the commodity space for over 40 years. There's a couple of companies. We have a publishing company, subscription-based, that we provide information primarily to farmers, grain elevators. We have a few hedge funds that take it, where we encourage people to make disciplined sales. The other is Kluis Commodity Advisors, where we're brokers. We have a lot of farmers, grain elevators, ethanol plants, livestock companies that hedge corn, soybean meal, soybeans, livestock through us.
Beautiful. So let's talk a little bit about the current climate in commodities world. So, of course, a couple of years ago when we had the Russia-Ukraine war start, you had soybean, wheat, all these prices kind of going crazy. Right now, a lot of those prices have, or I guess let's just talk about the corn, soybean, and wheat prices compared to last year. What are we seeing? Have we seen normalization in those markets?
Corn's had a very significant rally back over the last, since August. We had a low on the nearby futures of about 360 a bushel. Currently, we're trading at 440. So that's come back to where it's been a nice 80-cent rally. If you look at the March contract alone, we're a good 70, 80 cents off the bottom. However, we're still a lot lower. We're down about $1 a bushel from where we were a year ago. We're down over $2 a bushel from where we were 2 years ago. So for many of the producers that we work with, if they did not hedge, forward sell their corn, they're losing anywhere from $50 to $150 per acre. Soybeans, it's much worse. We're sitting there at about $9.80 on nearby soybeans right now. A year ago, we were just over $13. 2 years ago, we were over $15. When you take off your basis, I'm sitting up in Fargo, North Dakota today, 80 cents off that. Some of these cash bids have dropped below $9 a bushel. Most producers need about $11.80 or $12 a bushel cash price to break even. So there again, we're seeing some significant losses, as much as $3 a bushel. 50 bushel beans, you're losing $150 per acre. So it's pretty tough. Wheat prices, before the war started with Russia invading Ukraine, we're sitting about $8.40 a bushel. We spiked up to, I think, $12.40. Right now, we're sitting about $5.70. So again, I've had some customers that have grown 90 bushels per acre wheat crop, and they're losing money on a cash basis. So it's pretty tough out in rural America. Some of the banks are starting to restrict credit on some of the farmers because they cannot show an operating profit for the crop they just harvested or the crop they'll plant and harvest in 2025.
Hey Al, thanks for coming on today, and it's great to get your perspective on commodities. This has been like, I usually will trade something in the space, if something is trending and looking pretty good, but it's been so quiet in this space. And then I hope that we have time to talk about energy too. But are any of these buying? I'm looking at a lot of these trends in the ag space, and they're kind of upper left to lower right. Is there anything that looks that's a buying opportunity in these trends that have been moving more towards the downside?
Corn's been trending higher, and I think it'll continue to move higher. I think there's some positive demand news. We had a very bullish USDA report yesterday saying exports and ethanol usage would be ramping up, and so we've had a nice move off of the bottom. I think soybeans and wheat are very undervalued. The trade is building in a record crop in South America. It's pretty premature to make that forecast. The weather in January and February is the key to watch for soybeans in South America, especially in Brazil, which now produces more soybeans than the U.S. So any type of weather scare, weather problem that would develop in Brazil, I think soybeans could easily put $1 a bushel on. We have in China, they've been selling a lot of what's called used cooking oil into the U.S. biofuels market. I think they're gaming our system. And if we get the new administration in there to stop some of these policies, I think that could easily help soybean oil rally. I think what the Chinese have done in the cooking oil market, veg oil market, has probably taken $1 a bushel off the soybean price.
Gotcha. And also, this move in coffee, which I would assume is weather, has been all weather related, but that's been one of the trends. And I don't have that chart up. I don't think I have access to coffee futures, but coffee and cocoa. Are these trends set to continue, or is this something that's temporary?
I think it's temporary. I don't follow coffee and cocoa that much. I do have some customers in Brazil that produce cattle and soybeans and coffee, so I talk to them quite often. But it's these looks to me like we've had a major rally in both of those markets, and that we've seen a top, and we seem like we're setting back. Certainly, the size of the candy bars has come down, and all that. So you're seeing where prices work, where people are trying to figure out a way to use less cocoa.
So Al, I just want to go back to something you mentioned earlier about some of the prices of some of these agricultural commodities, and that it could be becoming a problem for certain parts of rural America, and maybe some of these banks. So for, say, regional banks that have clients that are mostly, or banks that have a large percentage of their clientele are farmers. Do you think those banks could run into issues here? You said they're restricting some credit here from some of those farmers, or like, do you follow those banks that service those farmers?
Not really. A lot of farmers are having a difficult time cash flowing, but land
Okay.
values are still at all-time highs. And so if they need to shore up their financials, they can sell off a quarter of land, something like that, and boom, all of a sudden, they put $1.5 million in their pocket, and their problem is fixed for a while. So we are seeing that. It has had a big impact on the demand for farm equipment. John Deere stock is still hanging in there really good, but I think they recently made significant layoffs in their production facilities across North America. Used equipment values, a combine that would go for $1.2 million a year ago is now worth $600,000. So that again puts a big dent in the farmers' balance sheets. But so far, John Deere is a global company. They're not selling as much in the U.S. They're selling more overseas. So the stock has not really been hit hard, but the equipment value, the used equipment, has really taken a hit.
Got it. Now let's move over to just energy and I guess just energy price and oil and whatnot. Because when I'm looking at the overall market, Al, one thing that I'm watching is kind of global oil demand. I think you can usually get a good gauge for the global economy. Obviously, if the demand is surging for oil and energy, that's usually a good sign for business. If it's not doing so well, sometimes that can be kind of a warning sign. And we're kind of in this weird zone right now where, again, just looking at the price of oil here, I'm simplifying it, but we can talk about other energy prices as well. But the price of oil here has kind of just stagnated. OPEC, I think, gave some today. They were talking about a drop in global demand. Is this worrisome to you that if we start to see less and less demand for energy globally, that could be a sign that the global economy is slowing down here?
I think that certainly is true. The global economy is slowing down. Certainly, we've seen a lot of cracks in the Chinese economy, and as their demand for oil has slowed down, it's led to a lot of surplus. OPEC Plus has extended their production cuts 1.5 million barrels per day. I think through June of next year, they're trying to stabilize and hold prices in. Up until this last week, we've had a very mild winter, most of the Midwest, so heating oil demand, natural gas demand, bitterly cold for a few days, but then back to warm. So the demand, whether you look at diesel for trucking, is down, home heating oil demand is down, and yet we continue to see very adequate supply. So we've just been in this extended trading channel. Crude seems to find a bottom at about 65, a top at about 72, and I don't know what's going to break us out of that coil. When I look at crude oil prices, very closely correlated with gasoline prices and ethanol, and the ethanol manufacturers that use about 37% of the U.S. corn crop have been making pretty good margins until last month, and now basically they're at a break even. If energy prices move lower, drill baby drill, and corn prices keep going higher, it could have an impact on their margins, and they could go in the red.
What does it mean for us, like, individually paying gas at the pump? Should we expect that to continue to move lower? Are gas prices going to go up? I mean, I think you follow this stuff a little bit more closely than I do, so I'm curious on your thoughts.
I just see it staying. We see the retail prices staying at about a 20-cent channel, much as crude oil. If crude oil is trading between 65 and 75, that means gasoline futures are probably going to trade in an 8 or 10 cent range. But I chart it by hand. I look at the charts on my computer, and we're just putting in what I would call a series of M's or W's on the charts. And again, I don't know the fundamentals that are going to break us out of there.
What just one more that I've been watching too is just nat gas futures, which you're probably well familiar with this one in terms of they call it the widowmaker from time to time. Anything that we should be watching in nat gas futures?
Watch weather in the U.S. and weather temperature forecasts. That if we do have a winter that sets in, much below normal temperatures across the Chicago, Des Moines, Omaha through the central Midwest, then I think a lot of those homes and businesses that are heated with natural gas will be cranking it wide open. And as the demand goes up, you'll see prices move higher.
Excellent. Thank you.
All right. Well, we've been on the line with Al Kluis again, joining us here from Wedbush, covering the commodities world. Al, always great to catch up, talking about, corn, soybeans, oil, a lot of this stuff. Someone in the chat just put that the ag world is the foundation on which everything else sits, which I thought was very well put. So, it's a good thing that we talk about this. We don't give enough airtime to commodities on the show. So, Al, anytime you want to come back on pre-market prep and talk to us about what's going on, we'd love to have you.
Thanks for the invite. I look forward to working with you again.
Yeah,
Thanks,
thank
Al.
you for. I know you mentioned you joined us from North Dakota. I didn't realize you got up early to join us. So everyone smash the like for Al, who got up bright and early this morning to join us because here on the East Coast, I think it's early. We start the show at 8 a.m., but you're getting up, I don't even know, God knows what time, 6 a.m. to come on the show. So I appreciate it.
Glad to be with you anytime.
All right, guys. Again, that was Al Kluis. Great guest. Always great, again, to talk about the commodities. Again, don't talk about them enough. We need to start talking some more commodities on the show. And Christian, you've got, I know you didn't have access to one of the futures, but most of those commodity futures, you have the charts for, which is great because I don't have access to a lot of those. And I find myself trying to find them on, random websites here and there.
Yeah, it's one of those things where they could be quiet for a while and then they could begin to perk up. So I think that getting the perspective of what's been going on in the space and what to watch, I think is very important. the energy space has been tough to trade. I've been trying to position in that a little bit here and there, but it seems like every time I do a little bit over the last couple of months, I get a little bit disappointed. And if I positioned a little bit in energy names in about a month ago, had some success with it, and I abandoned it just because it doesn't have the momentum of what we're seeing with the rest of the market.
Yeah, and it was when was it, about a year ago or so? We had the phase where like cocoa futures were like going crazy. Like it was like you had certain commodity futures that were trading like meme stocks, and it was just like, oh my god, you could have been up 300% over the last few months just buying these futures. So I mean, it is something to watch for again, especially when you do get those kind of outside the norm moves there. Any tickers? Yeah, let me know if there's anything we got to talk about before we wrap up.
Before we wrap up, I was just going to bring up. As our guests were speaking, there's some news out about Apple possibly developing a chip with Broadcom, and I had mentioned that we've been seeing some call activity in Broadcom. You kind of thought, I thought it was related to options positioning. Earnings positioning, which is Thursday after the close. But there you have it. There's a real nice move in Broadcom this morning. We're up to 180 on that news. So the takeaway here is, so first of all, like a positive for Broadcom, but also it just seems like everybody is chomping at Nvidia. Like, if you're going to get onto that platform, from what I understand, it's expensive. Like Nvidia it seems like they suck you into their whole platform, where you've got to, subscribe to what they're doing, and you've got to stay a customer. But it seems like they're starting to get a bit more competition. Now, who knows like how long it takes for them to develop a new AI chip, and we're still waiting to hear more about what's the name of the latest chip that Nvidia has out?
Not Hopper, Blackwell.
Yes, Blackwell. I want to say Blackstone, but it's not Blackstone. So, we're still waiting to hear about that. But, let's look to see what Nvidia is doing here. It's not doing much, but this seems to be that they've got increased competition that's happening in the space.
Yeah, I mean, anytime you're a big tech company like Broadcom and you're talking about partnering with Apple, that's usually a pretty good sign, because, Apple likes the top of the line technology, A, and B, Apple in itself, pretty big company. And if you sign them up as a partner, then that could lead to some big dollars coming your way. So Apple has invested a lot of money at this point in their own in-house chips. And I will say, I think my MacBook runs on an Apple chip, and I think they do a pretty good job over there as well. So we'll definitely keep watching that news here on Broadcom. AVGO up about 5% this morning as we head into the open, but it did close down about 4% yesterday. So it's kind of just like erasing the losses from yesterday at this point. Still pretty flat from the close a couple days ago. Other stocks as we head into the open that I'm watching. Netflix, just wow, this stock is an absolute freaking monster. $925 here. I'm interested in watching Netflix's price action here because, the trend is your friend. The trend is still positive, but you did hit a little hiccup here at around $940, $935. Looks like we kind of topped out at. So if we continue to show some weakness, I might be looking at a few puts on Netflix, just looking for a couple percentage points to the downside there. Google, of course, we mentioned it earlier, another stock that's trading right around all-time highs. Of course, I'm always going to start with just these Mag 7 stocks, just because it's going to give me insights into how the overall market is doing, not to mention some trading opportunities when these things do get a little frothy. So, good morning this morning, Christian. Despite the lack of maybe some individual stock news, of course, we had CPI. We got to talk some commodities. So all in all, it was great to hang out with you, and thank you to everyone in the chat who tuned in. We will be back tomorrow. We do have, I just had it in front of me who is coming on with us tomorrow. Oh, it will be Eric Kroll talking about IPOs. And, we've had Eric on before. We catch up on the IPO market with Eric Kroll. So that will be tomorrow. And then on Friday, we've got Jonathan Corpina coming to join us from Meridian Equity Partners. Love having Corpina on as well. Thank you to everyone who tuned in again today. Christian, any final thoughts, any final words?
Yeah, quickly. CPI report again. The number comes in line, and the market rallies. So, what is that telling us? It's telling us that there's no stopping. Most likely, again, it's not 100%, but it's not stopping the Fed from cutting interest rates one more time, going out to the 18th. That's why I think that we're moving up. I think people were fearing that it was going to be higher than that, and the Fed was going to have to pump the brakes on that last interest rate cut of 2024. So for now, onward we go, and the market likes the number this morning.
Beautiful. All right. Well, Christian, thank you again to you for hanging out with me this morning, to our guests who came in with us, Blue and Al. Of course, we will be back tomorrow, 8 a.m. Again, assuming, knock on wood, all the streaming software and everything is working, which it seemed to be a lot better today. And with that, we will leave you guys. Stay green, happy trading, and we will see you guys tomorrow morning.
Have a great day, all.